Five.
Check 1, 2.
Check 1, 2. All right, we're live.
All
you guys
right.
ready to rock? Shelby and Shelby?
Ready to rock and roll.
This isn't going to get confusing at all. Shelby.
It's Shelby.
All right, well, we're just going to have a discussion around the fears, the myths, the questions, and just around the whole home buying process. And Shelby, how long have you been in the business, bro?
I got in the business in 2005. So I had a good little run, and then I survived the crash. I was fortunate enough to ride it all the way out, and I never got out of the business. And it's been a crazy ride.
That's awesome. And so now you're broker owner, United Wholesale Lending. And so we're going to dive more into that. But for like right off the bat, how can people contact you just so that way they have your information up front? And we'll reiterate it later too.
Great. The best way to reach me is either on my cell phone, or you can reach me on Facebook. You can also reach me by email. So you can Google me. There's multiple ways to get a hold of me, and any channel is the best channel.
Awesome. So let's dive into it. There's a lot of information regarding the home buying process, and like right from the get-go, from a real estate standpoint, we look at it and we get phone calls all the time of people that want to buy a home, and they're like, I'm so excited, I want to go buy a home. Can you send me some properties? Or, hey, I'm standing out in front of this house. Can you come and show me the house? And we're like, whoa, easy. Okay, time to slow down here. And we're going to go over today a lot of the things that scare people and consumers about the buying process, things that they have heard they would think are true, which are not. And just some of the basic questions, or even some of the common questions that buyers have in this industry, and when they want to go buy a house. And I think there's quite a lot to cover in that regard, because I think a lot of people they don't know what they don't know, and they underestimate the process and literally what needs to go into buying a home. It's not just, oh, I found a house, let me just write a check and get a loan, and I'm going to close this deal in 30 days, I'm going to move it.
Yeah.
And so I think what we're going to cover today is a lot of that, as well as a lot of the lending process. So this way they understand, don't go shopping without a budget. And, credit score has got to be there. There's a thing called the pre-approval process. And one thing I hope you touch on, Shelby, is people go, I got pre-qual through this online website, and it spit out this letter saying I can afford a $600,000 house. But I had a bankruptcy 2 years ago.
Yeah.
There's all these different websites. And so we'll cut into that. So anything right off the top that you guys can think of that you want to make sure that we cover?
Maybe the importance of getting a pre-approval. A lot of people, they don't realize the importance of getting pre-approved. And they don't realize the importance of being pre-approved up front. A lot of people, they just want to get let into the house. And they go into the house and they fall in love, and then they call me last minute and they're like, hey, I need a pre-approval letter. Can you get me one? Wrong way to approach it, Right. So we want to make sure that people are going in with their front feet face forward, and they're diving in on the biggest investment, and they're prepared. 80% of all buyers, first-time home buyers especially, they're not prepared when they enter into the loan process. They're scrambling to find documents. It starts things off stressful. And, it's a big investment. You're already stressed out. So you want to make sure that you spend the time to get pre-approved up front. You have a realistic budget before you start looking. And, that's what I'd really like to go over today as well.
On budget, too, I think a lot of people think, oh, well, they think of what they can get as a whole for a loan. And, one of the things I like to point out is go off to what you're comfortable with monthly, because some people may be pre-approved for more due to their income. But if they're pre-approved for $500,000, but they're more comfortable monthly on a $400,000 level, that expectation needs to be set very quick, instead of looking at $500,000 homes and realizing that's out of my price point, even though I can get a loan for it financially on a month-to-month, day-to-day basis. It's not something that I can keep going and obtain.
Yeah,
absolutely. Let's dive into that. I think that, from the pre-approval process, why it's important. No matter, like, in this universe to date, no matter what's going on, you need money to buy a house. I don't care if you have perfect hair like Shelby does. I mean, that thing,
Other Shelby.
The flawless. You know, you still need money to buy a house.
Yeah.
And whether you're paying cash or you want to get a loan, it's always good to know your budget. It's always good before you start looking that, hey, I can afford this house. Because I've worked with people when I was early on in my career that I was young and dumb, and I just went, you want to go see a house? Sure, I'm there. Threw on a suit real quick, jumped in my car, went to go show a property, and they're like, oh, thanks. Okay, well, let me go get a loan. And I'm like, okay, well, you couldn't even qualify for even close to the house we just looked at.
Right.
And I just completely wasted my time. You wasted your time. And now your heart is broken because you fell in love with this house and you can't afford it.
And then anything else you start looking at after that for what you can afford, it's hard to come to terms with something because your expectations are already set so high.
Exactly. On an FHA loan, that's traditionally what a lot of first-time home buyers use that channel to buy a house. FHA will allow you to spend up to 55% of your gross income on your home, which is crazy. So, I mean, I think that what people need to do is when you start to figure out that you're going to buy a house, you need to contact a mortgage professional that you know and trust. Don't go online. They're not going to have your best interest at heart. And you need to come up with a realistic budget. Find out how much are taxes and insurance and, you know, what is the total monthly payment? And figure out a budget that's comfortable for you before you go look at any homes. That way, you know, you're right, Shelby. People go out and they find these houses, they fall in love. And when they're looking at an online payment calculator, they're thinking, oh, I can afford this. And then when they come to me and they already got their heart set, they already told their friends, their family, everybody that they found this house that they love, now they're trying to stretch to make it work. And, you know, that's not always the best way to buy a house. So,
especially as a first-time home buyer.
And they're not looking, like you said, they're not looking at taxes. What if that house or that condo is in an HOA community? Or if you don't have 20% or whatever percent down, and you need to pay for, you know, private mortgage insurance. I mean, that all adds up on your mortgage, and it really screws up a lot of deals for some people because then their heart's broken where they go, I need to pay $400 a month in mortgage insurance.
Right.
Mm-hmm.
I can't afford
HOA
that
too, because even if the price point and monthly payment for the loan is okay, tacking on a $350 HOA is going to affect your payment overall and your ratio. So it could still put a damper on things.
And one of the benefits of coming to the lender first and getting pre-approved is that if there is any tweaks that we need to make, we'll have the ability to do it beforehand. So the difference between getting a loan at a 680 credit score and a 720 score is night and day. And I think what people don't realize is you can get your score up from a 680 to a 720 pretty fast. Yeah. We have a system that we use called a rapid rescore. It takes between 5 and 7 days. It allows you to pay down some of those high limit credit cards. Maybe your limit's $1,000 and you have $800 on the card, but you plan to pay it off in a month. Well, if we pull your credit before you pay that off, your score is going to be down pretty low. But if you get pre-approved up front and we tell you that information, hey, if you could pay this card down by $500, it'll raise your score to a 720. And now maybe you don't have to pay monthly mortgage insurance, and that saves you $200 a month.
Right.
So,
well, and that can be a whole other webinar we can do with, like Jeff Sipes with Blue Water Credit in regards to, hey, don't go closing credit cards. Leave a little balance on there. It's all about ratios. It's all about how your credit's functioning. It's not about just paying stuff off and closing stuff down, right? Which is another strategy and as far as getting your credit sore higher.
Yeah.
I think there's a misconception too on how long it could possibly take to repair your credit, because I have a lot of people that I've worked with in the past, and that they're even now that are like, oh, well, my credit's not that good. I might be able to buy in about 2 years or so. And you're like, 2 years, that's kind of a long time. We might be able to get you in something sooner. Like, they have this misconception that it's so far out of reach that they're going to have to struggle so much to make it happen.
Yeah.
So, Shelby, walk us through
great product.
Oh, go ahead. Sorry, go ahead.
Well, we have a great product right now for first-time home buyers that a lot of people don't know that they can qualify for. And we can do this product with no monthly mortgage insurance. You only have to put 1% down. Us, the lender, gives them a free 2% down, and you don't need to go FHA. The only caveat is you need to have a 720 credit score or above. So when clients come to me beforehand and I have 3 or 4 months to work on their credit with them, they can get into a way better loan for them. And, that loan is going to be there for 30 years. So to touch on that, I think that, yep, first-time home buyers, 1% down program. That's phenomenal. So what were you saying?
No, I was saying, so walk us through, because the biggest thing before we even get to our job, right, as realtors, as real estate professionals, before we can even get to our job, we want to make sure that every one of our clients has the budget, has the loan, are ready to go. And then we sit down with them and go through what's called the home buyer consultation, which we'll get into here in a little bit. First step, get the money. Unless you got cash sitting in the bank somewhere or you're liquid and you can get it to go buy a house, great. If you need a loan and you want to get a loan to buy the property, and if you have the cash, walk us through just at a high level the pre-approval process. What could we expect if we came into your office and said, great, I want to get pre-approved for a loan? What are you going to need from us to say, I could, with confidence, say that you can go out and buy a house for this?
Perfect. So the first step is to fill out the application. So we can either do that in person, we can do it over the phone, or you can do it online through an online application. Okay. So that's the first step. So if you have 15 minutes, we can fill out the online application, and then we'll have a really good idea of where you stand. Then we're going to run your credit, and we're going to go over your credit report together to make sure that we go over all of the liabilities and make sure that there's no inaccuracies in your credit report. It's very important that you go over that with somebody who's a professional, because there's a difference between if you get your credit pulled from a car loan or you get your credit pulled with Credit Karma. They're not the same. Your mortgage report is different than a report that you got on a car. So a lot of the times I'll have people come in and go, I already know what my score is. I'm at a 680. And we pull their credit, it comes back at a 620, and they don't qualify. We're like, oh. And they're totally depressed. And, they're thinking the whole time they've been all good. But that's the first step. We're going to go over the credit. And then at that point, we're going to need a copy of their W-2s, their tax returns, a copy of their bank statements. We may need a copy of their ID, their social security card. But the meat and the potatoes is your pay stubs, your W-2s, and your bank statements. Okay?
So why is that important? Yeah.
Well, at that point, what we're going to do is we're going to go over the three ways that we can actually qualify a borrower. So we're going to qualify their assets to make sure that they have enough funds to afford the closing costs and the down payment. And then we're going to make sure that their credit qualifies. They don't have any judgments or liens or anything like that that's holding them back. Maybe a bankruptcy that has been lingering. So we want to go over their credit. And then the third thing is we want to go over their income. We want to make sure that they have a good enough employment history that's going to qualify them for the home to make the monthly payments.
Okay. So once you have all of this, for those really analytical people that are going to watch this either now or in the future. So if I'm giving you everything about me, my social security number, my all my information, my income, right? You're going to probably know more about me than my parents do at that point. What do you do with this information?
Well, what we're going to do is we're going to verify it first and foremost. We're going to make sure that that you qualify for the loan product that we're trying to qualify you for. So each different loan has a different process of qualifying. So they have different ratios you have to qualify upon, and so we're going to gather the information up first, and then we're going to find out which product, which loan option is the best for your specific scenario. So at that point, we're going to make sure that we verify your employment history. So we're going to have to reach your HR, and we're going to verify how you get paid, how often you get paid. Do you have any bonus income? Do you have any commission income? And then at that point, we're going to go over the different options for you and find out which one is the best for you and your family and your mortgage options.
So you're saying loan product. You mean there's not just, I go to you and I say, I want to get a loan. I just want a loan. Just give me a loan.
Correct.
What are loan products? Like what are different loan products? Give us a few examples of what that would be.
So if you served in the military, you can qualify for a VA loan. Okay. If you have a lower credit score, FHA loan might be your best option. You may go for a jumbo loan. We have a normal conventional loan. And then there's different down payment options. But all of them are tied to your specific guidelines that you'll have to meet according to where you qualify. So, it's really unfortunate. The one that I see the most is I see people going into FHA loans when they really shouldn't have went that route. So, it's just every bank offers different products. No bank is the same.
Mm-hmm.
So you just really want to make sure that you shop around and you don't just go to one guy and get a quote. You want to actually make sure that you're educated and you review different loan options and you really do your homework.
And then you were telling us that one of our last meetings or events that you even have a perk just to even take a second look at somebody's pre-approval.
I do.
Right? So tell us about that.
So we have a program called the Second Look where we'll actually offer a client a $50 gift card if they let us see their loan estimate from another mortgage company. So we're confident in our rates and our products. And we want to make sure that people are shopping around and they're getting the best deal. So we offer that product of a second look, and we're willing to give them a $50 gift card just to take a look at what they have going on. And that's what I see the most is that people are going into FHA loans when they really shouldn't be. So putting somebody into the right product, it makes you feel good.
Yeah. And so for some people that may not know, what is the difference, Shelby, in going through your company versus maybe they bank with Golden One or Bank of America or something like that, and strictly just saying, oh, well, I have an account, so I must have to get my loan through where I bank. What is the difference with going through you versus maybe just trying to find something at Bank of America or wherever their banking institution is?
Great question. So the biggest difference is the licensing requirements. If you go into a major banking institution, a Bank of America or something like that, maybe a Wells Fargo, they don't actually have to get their own licensing. They fall right under the bank's umbrella. So the quality of the loan officer that you're going to be receiving, it's not the same. So with our company, you have to have both a BRE license and you have to have an NMLS licensing, which is the highest amount of licensing that you could receive in our industry. So you're going to be dealing with a qualified mortgage professional. We're also on the wholesale side of lending. So we're actually a broker. And when you're a broker, you have multiple avenues that you can shop. So what we do is we take in a client's information, we find out which product is the best for them, and then they have choices. So we can go with a channel that maybe is like United Wholesale Mortgage or maybe Bank of America on the wholesale side. So we give them their options and find the bank that fits the best with their needs and that's offering them the best deal. So we actually have these banks fighting for their business and trying to offer incentives to earn their business instead of just going with a regular banking institution that has retail rates and only offers one product of service.
That's awesome. And so with you're I mean, I have no better analogy, but with you from a loan standpoint, with you in mind is like you're going to a buffet. You have multiple options to get them into the right product.
Exactly.
Right.
And go ahead.
I beat you.
Yeah, they have multiple options. So I mean, that's the best avenue, because if you have a 680 credit score, okay, and you need to go in an FHA loan, okay, well, every bank will do an FHA loan at a 680 credit score. But we'll take Wells Fargo, for example. Wells Fargo prices jumbo loans great. They'll do an FHA loan, but they price it out terribly. So, I mean, you might go to Wells Fargo and say, hey, I was interested in an FHA loan. I have a 680 credit score. They would give you a 4.1 interest rate. But another bank that specializes in people with, regular credit, 680 credit score on an FHA loan, they specialize in FHA, they can offer you a 3.75. So not every bank has the same interest rates or the same fees, but they're all able to offer the same products. So there's a big misconception there where people think that, as long as the bank can do the loan, why would one bank be able to offer me a better deal than another? But every single lender prices the deals out differently. So it's really important that you look at your options.
And then what about your credit being affected by shopping loans around? So if I went to Wells Fargo and I said, great, I want to apply for a home mortgage. And then I go, and then I hear Shelby, saying, hey, I'll give you $50 to take another look. And I'm like, hey, man, you're cool, but, I don't want my credit hit again from another inquiry, and it's just going to damage my credit. Is that true?
So it's true to a certain degree. If you get your credit pulled maybe 5 to 7 times, it may affect your score. Now, we're not talking about a 20-point or 50-point drop here. We're talking about a couple points. But obviously, the credit bureaus know that you're going to be shopping around a mortgage. They don't want to just tie you to one pull. So you can pull your credit anywhere from 1 to 4 or 5 times and not have any effect on your credit at all.
And what I heard was, and I could be wrong, it also depends upon the period of time. Like if you ran your credit score 2 to 3 times in say a 2 to 3 week or 4 week period, they know you're shopping for something specific versus 5 inquiries over an 8-month period for a loan. I heard the time frame can also be a factor.
Absolutely.
Okay. So in regard to the do's and don'ts, and so we can start diving in more to the real estate side of stuff too. In regards to, great, once you talk to Shelby, Elias, and you got your loan, you're ready to rock, and they come back to us and say, all right, Jesse, Shelby, I got my pre-approval. We get a phone call from Shelby. All right, guys, they're pre-approved. They're ready to rock. We got great, go get them a house. Then we start the process and sit down with them and say, great, congratulations on getting approved. Now we're going to go find the home of your dreams, right? And the home consultation process is a lot of what we get is phone calls. Hey, Jesse, hey, Shelby, I want a 4-bedroom, 2-bath, 2,000 square foot home in Roseville. Okay, go. Okay, well, what do you approve for? I'm approved $450. Okay, cool. We need more information than that, right? I mean, we're not just going to go put in the search. Our job is not to show you around to 50 homes and waste your time and gas money. We want to get you into a home fairly quickly. And because you're excited about it, you want to get into a house, especially if there's a time frame involved where there's a holiday, kids are in school, or kids are going back to school, so many different factors, or if there's a job transfer, relocation. So we're going to sit down with you and ask you a whole bunch of questions in regards to, what your dream home looks like. What, with your budget, do you want? And what's the most important features that you want? And we'll sit down for 30 minutes to an hour and say, great, I want you to just walk me through the property. We pull up to the house. We're walking in through the front door. What do you see? From front door to back door to the garage to outside, what do you see? And we're making notes. We're taking notes on 2 to 3 pages of paper. And then we go back and go, great, out of all this, what are the 3 non-negotiables? Right? What are the things that you absolutely like, if this does not have it, done? And then we have a really good idea what you're passionate about and what you truly love about the home you're going to buy. And so with that, the home showing process, we get out, start looking at homes. We get excited. A lot of the things and fears people have is that if they walk into a house and they go, I can't buy this house. Well, it has everything that you really want. It has all of your non-negotiables.
There's a red wall.
There's a red wall on that carpet. I don't like the color of the carpet. And we're like, no. We could get that fixed. So one of the things too, from one of those myths or fears, are letting buyers know that there's going to be things that are not going to be 100% perfect unless you go out and buy a lot
And build a custom home.
And you hire the architect to do it for you. But there's going to be things that are not going to be 100% perfect, and we strive for that. Other fears also are, you got the carpet, you got the paint color. There's a lot of different factors as well as too. Is like, oh, they're asking way too much. Well, this is what our job is as realtors, is negotiation, right? And I think the three of us were masterminding this before this webinar. Is anybody with an MLS key can open up a house. Anybody with a license can get access to write a contract on zip forms. Being able to write a contract and understand the contract are two different things.
Yeah.
Being in this business 12 years, right? You understand, like, okay, this agent has no clue what this contract says and even what it means, period. And so I look back at that and I go, we really get paid to make sure that we negotiate the best deal for our client, and we keep them out of harm's way from a legal standpoint to make sure that we understand the contract. We understand what it says. We understand the terms of the agreement, and then we can go back and fight for that. Shelby Elias did a great job pre-approving you for the loan. And if you want to spend that much, great. If you don't want to spend that much, like you said, we're going to negotiate it and make sure that it's a win for you. Right. Maybe you want to add on that?
I think too, just being realistic. Everybody always wants a deal, and of course you want to get, the best possible outcome and spend as little as possible. But we do want to make sure we're taking into consideration, the market and where it's at. A couple months ago, obviously, was at the height of the market, and homes were a little bit more expensive than they might be right now, or what sellers are willing to take for them. So I think being realistic too, and realizing what type of market you're in, and making sure that you have an agent that understands that as well.
Well, I think too, the relationship between the agent and the lender. Wells Fargo is a great example, and not dissing Wells Fargo. I had a transaction years ago where they called an 800 number for Wells Fargo. They got pre-approved and like, okay, I like this person. Like, have you met them? Well, no, they sounded really cool on the phone. I'm like, okay, whatever. And so they really wanted to work with Wells Fargo. The lender was like in Arizona. The underwriter was on like Mountain Time, and the processor was on the East Coast. And I was working with like 3 different time zones for one transaction. Oh, wow. And I'm like, you're kidding me. And it was just insane. And so one of the things that we stress is whether a lot of people say, well, I have a good friend, my uncle, my brother, my best friend's a realtor or a lender. That's great. Just in case things get really bad, just know that you got to be prepared to take them to court if something were to go south. So just keep that in mind, especially if you use like Uncle Bob for your home inspection. And then on top of that, it's the relationship between the agent and the lender. We've worked together before. We know how each other work. We know how to contact each other. We can easily call up Shelby and go, hey, this is where we're at. We're going to write an offer on this. These are the terms. This is the price. Does this sound good to you? Or can we get your approval on this? Yep, sounds good. Or no, I tweaked this because maybe they don't have enough for the down payment. They don't have this much cash to bring to the closing table. Let's maybe adjust this a little bit. And we can do that. And that's what working together, like when you have a team, it makes more sense to have people that you know and trust, not just I have a realtor over here, I have a lender over here, that everybody in the transaction knows how to work with each other.
Right.
Exactly.
I think it's important too, as an agent, to work with a lender that you trust and that will go to bat for you and your client, versus having a client just find a random lender that maybe they don't even have a relationship with, or it was a referral and you have no idea if they're going to go to bat for you at the end of the day, or make sure that your stuff gets done on time and that you're able to abide by the contract that you agreed to do.
Yeah. Well, and when I say what I'm not worried about, like I'm not worried about friends or family using any 3 of us, because we know our stuff. We're dialed. We're above board. We have integrity. We're ethical. And it just comes down to any professional that you use, make sure they know what they're doing, right? Whether you're related to them or a friend. And I think one of the things we talked about when we were in your office, Shelby, was it's interesting that even some people that know you really close won't use you, because what we said earlier is that you're opening a door to their entire financial well-being, and you know everything about them. And some people aren't quite comfortable with that. And you're like, my best interest is you. Like, that's my job, is to make sure
nobody cares more about you than me.
Right? Like, nobody cares more about you than I do. So, yeah, I may learn more stuff about you than you want me to know, but I'm going to know how to take care of you the best.
Exactly. Yeah. One of the things that I get a lot is I always call the listing agent on any offer that my buyers write. I always call the listing agent. I say, hey, my name's Shelby Elias. I'm a local lender. I have 80 other loan officers that work under me. Here are my numbers. Here are my stats. Your sellers are going to be comfortable knowing that I'm going to be able to close my buyer's loan. Here's everything about my buyer. I already have everything up front. We met in person. Like, they're really good people. And the number one thing that I get from the listing agent is they're concerned about, am I a local lender? You know what I mean? Have you met with them in person? And so some of these buyers out there, I feel sorry for them, because if they're using somebody that's online, or somebody that they don't know, or maybe somebody that doesn't have connections within the community or whatever it is, they're beating their head against the wall and they're never going to get their offer accepted. Yep. So that might be something to consider. If you're out there and you're writing offers, they're not getting accepted, there might be a reason. So I think that is important. So it is important that you work with a team that's comfortable with each other, and that you mesh well with. I think that there's definitely a degree of importance there, and everybody has to work on the same team. The agent has to work on the same team, the lender has to work on the same team, and the client has to be willing and want to work with everybody to get this done. So, yeah.
And I think as a buyer, some people might have a question as to why would a seller or a listing agent care who I use, who I'm getting the money from. I'm telling you I have the money, right? But at the end of the day, it just goes back to the listing agent asking you, are you a local lender? Have you met with them? Because there are horror stories out there of people using online, programs and things like that issue a pre-approval, and you get 15, 20 days into an escrow period, and all of a sudden this buyer really isn't qualified to purchase this home, and now they have to go back to their seller and say, we took it off the market, we missed out on all these buyers, and we're back to square one. So it is important.
Could you imagine if you were a seller and you packed your entire house up?
Yep.
And then you're like, oh, sorry, I fell through. What?
Yeah.
Yeah, I'm moving in a week.
Well, and the sad thing too is, like, a real life story that happened less than a year ago was an agent on our team was working with a lady, waited 50 years to buy her first home, and went and got approved by I don't know who. They weren't local. All like a week a week before closing. Everything went. No, I'm sorry. She needed something on her taxes fixed, they said, to make sure that she can get the loan. They helped her amend her taxes a few days before closing. The lender got fired or laid off. They couldn't close the loan because they said the way she amended her taxes made her unable to buy the house now. And then that company went out of business.
Wow.
And so this lady who waited 50 years to buy a house amended her taxes because this is what this company told her to do, completely screwed her with that company. That company's not even around anymore. And now she's trying to work, I guess, with somebody else that's like, great, you're about 6 to 9 months out, so we can clean this up so you can go back to your dream for the last 50 years to buy a house.
Right.
Yeah.
I mean, it's just stories like that just royally piss me off, because I'm like, not that every 1-800 number that you call from a loan standpoint is going to be bad. I personally have just never had a good experience with them, and I'd rather you work with somebody that if I need to go sit down at your desk and talk to you face to face, I can.
Mm-hmm.
And I think that's the importance, and one of the do's and don'ts when you're buying a house is Work with people that you know and trust. And if you don't know anybody locally or that you can work with, do your homework, right? Do your homework and make sure that you know and trust them. Make sure that they're reputable. Make sure that they've closed real estate transactions before. Make sure they've done a loan before. And even if they're new, not dogging on anybody who's new or whatever, it's great. If you're new, awesome. I trust you. Now I need to know the team behind you.
Right.
Or do you have the support? Do you have the resources you need to make sure that I'm not going to get screwed? Yeah. And I hear horror stories all the time, and which is what we wanted to do these webinar series, because we want to protect people from having to go through that. You want to buy a house. There's only a few really exciting things in your life, especially one of the biggest investments of your life. It should be exciting. It's going to be stressful at times, but you shouldn't lose a ton of sleep over it.
Right.
Yeah.
So now I'm just going off on a rant, and just I'm passionate about it. So let's dive into a few more do's and don'ts of real estate. So oh my gosh, there's like the 10 commandments of the do's and don'ts of real estate on what you should not do. And one of the ones that stuck out to all three of us right away was what? Don't go buy a car, or open up a credit card, or do anything like that during the escrow period. Now, why would that affect their ability to get a loan, Shelby?
So believe it or not, this happens a lot. We send out a package at the beginning of the process. It's called the blueprint. And in the blueprint, there's all of the do's and don'ts. Number one that comes up every time, well, the number one, if it does come up, it's somebody bought a car, and what they don't realize is that payment that they were qualified on, or the purchase price, was based on their liabilities. And people are like, well, I just traded it in and I bought a new car. It's only about $50 more per month. But that $50 could cause them to not qualify.
Right.
So, oftentimes people go and they buy what their max is. And so that's a major one. Don't go and buy a new car. People do it. Another one is they get looped into one of those that we're just about to close, and they went to Home Depot to order their washer and dryer, and they were offering 20% off if you open up a Home Depot credit card.
Yes.
And they got to get that deal. So they open up the Home Depot credit card, and it pops up on our end as an inquiry, and the bank says, hey, what's up with this Home Depot card? Oh, I just opened it up. It charged me, it was $500. It's not that big of a deal. If you need, I'll pay it off. Okay, sure, not a big deal. But now that you have a new inquiry, we're going to re-pull your credit. And then when we re-pull their credit, now their score is different than when we started 60 days ago, and they don't qualify for the home.
Yep.
So it's crazy how important these things are. So some of the do's and the don'ts are don't buy a new car. Don't get your credit pulled at all. Don't go take out any new credit cards. You could use the credit cards that you already have. That's fine. Just don't take out any new ones.
Right.
Don't change your employment. People do that all the time. And it's funny because people, they're like, I don't care if I get a better job opportunity, I'm out. Well, that's fine, but as long as you're okay with potentially losing the house. And sometimes people are, we'll let them know right up front. They'll call and say, hey, I got a new job offer. And I'm like, well, we're going to close in 15 days. Can you wait? I don't want anything I'll roll the dice. Okay. So most of the time it works out fine, but it does delay things, and, it's definitely not fun to go through. So if you can, please avoid not taking any new positions at work, any new job opportunities. Let's see, what's another one?
What about self-employed people?
Going from W-2 employment to self-employed?
Or just self-employed in general?
If you're self-employed, you're the one that definitely needs to get qualified up front no matter what. I mean, you could feel like you're squeaky clean, and it's tough because we only qualify you based off of your adjusted gross income after all of your deductions. So you'd be surprised. I mean, people want to go to a good CPA. They're like, oh, my CPA is great. Why? Because he writes everything off for me.
Right.
Yeah.
Well, that's
No, I had
awesome
a
when you go to
family
pay
member.
taxes. But
I have a family member whose business, he's self-employed, and he's like, my business makes X amount of dollars, $100,000 a year, and all of a sudden he's like, gets a qualified letter for $200,000, and he's like, what is this? It's like, he's like, I could afford so much more of a home, and it's like, well, on paper, you write everything off. No, on paper you can't.
Yeah.
So
if you are thinking about purchasing a house maybe in the next 6 months and you're self-employed, very important that you reach out immediately, because I might be able to coach you on how much you need to claim in order to buy the house that you want. So, like right now would be a great time. If you're self-employed, you should contact me now before you file those taxes, because you don't want to have to wait a whole nother year. File the taxes right, and then you qualify for the home that you want.
And you're gonna pay the taxes. You're gonna pay the penalty right now. You're gonna pay the piper, but you're also gonna be able to afford more of a house too.
Right.
Exactly.
So were you saying?
Yeah.
No, I was just saying, I think that has to do with, I have a lot of friends and family in, restaurant business, bartenders, people that work at casinos. A lot of, 90% of their wages is off of tips, and they make great money. But at the end of the day, it's like, what do you claim? Do you claim all your tips? No, you don't claim all your tips.
IRS, earmuffs.
So, it just comes down to things like that. And they always ask me, well, how much do I have to claim? Well, it just depends. You're going to have to talk to someone and figure out where you're at and what you're really going to be able to do.
Yeah.
And prep for it is the number one thing.
Mm-hmm. Absolutely.
Well, and kind of going back to do's and don'ts and just the whole etiquette of buying a house in the period is, and anybody who's going to watch this later, if you call the agent first and the first thing we're asking you is, you're like, I want to go see this house. Can you go see this house? We've never met you before. Even if we have met you, you're like, I want to go see this house. And the first thing we say is, great, have you spoken to a lender yet and found a loan that you're comfortable with? We're not asking you to insult you. We're not asking you to say, okay, we just want to make sure you have the money first. We are, but in a nice way, right? Before we go out and we're going to get in the car, drive you around, or go show you properties. One, we're taking time away too, which is our job. But you're also taking time away too, and you're wasting gas driving around. You're excited to go buy a house. We're not asking you just because we're being jerks and want to insult you by going, hey, you got the money to buy this house, or have you talked to a lender yet? No, we want to make sure that if you're not paying cash, that you have a loan, because we want to make sure that you can stay excited about buying a house, and the purchase price or the size of the house, the price of the house you want. Right. And so there's a lot of things that people they do. They get a little bit peeved when we're like, are you pre-approved? Or most people don't understand what pre-approved means anyways. It's more of, hey, have you found a loan yet? Have you talked to a lender? We're not saying, no, we're not going to work with you. Don't talk to us until you talk to a lender. No, we'll still help and coach you through it. But before anything can start, before you go buy a car, before you go buy that, pair of True Religion jeans, you got to make sure you got a budget. You got to make sure you have the money. And you got to have those things in place. And so there's certain things from us that we're not doing it to be jerks or that we're trying to insult you as a potential buyer. It's more of, we want to make sure that we're taking care of you, and that you, us, Shelby, we all have the information we need to make sure that we can make this as seamless and painless process as possible. Right? And plus too, if we don't know you, we've never met you, it's for safety too. Right? We don't want to go out and meet somebody at a house that we've never met before, and go, hey, I saw this house. Can you come show it to me? I don't know who you are. I've never met you. I'm going to meet you in my office. I'll meet you at a Starbucks. Go meet Shelby at his office first, because he'll have your social security number. And then that way, if anything happens, he can track it back and get that to the cops, right? And so there's a lot of things that we do just for safety reasons too, because there's some crazy people out there. But getting back to buying a house. Now, this person's in escrow, right? We found them a house. Shelby went out. They're locked into a $450,000, $500,000 house. They're super excited. We got the stuff on our end. We get you the contract, Shelby. You're ready to rock. What happens on your end once they actually, all right, great, we found the house we want. Now I want to buy it.
So what we do is we reach out to all parties and introduce ourselves, and we request all of the fees from the title company, and we start to work on the initial loan disclosures. So we're going to work on preparing a disclosure that's going to go over an estimate of all of the loan terms. Then we go over that with the client. And at that point, when they acknowledge those initial disclosures, we're going to order their appraisal and we're going to submit the loan into underwriting. Okay. The loan typically takes about 48 hours to get approved. And the appraisal usually takes anywhere from 5 to 7 days for us to get the report back. When the report comes back from the appraiser, one of two things happens. The appraisal comes in at value with no repairs, or the appraisal comes in low, and we have to go back and renegotiate. Once we get past the appraisal part, the client's going to be working on anything that we might need to satisfy the loan approval. And once we have everything signed off on that loan approval, and you guys on your side have everything worked out with property inspections and everything on that side, we come to terms and we can sign the loan docs and fund and record the deal.
Awesome.
Yeah.
And so during that process, we're going through inspections. We got the inspections. We're getting that dialed in to make sure that, and those are crucial, right? The pest inspection, the home inspection.
Right. You want to know what you're up against.
Yeah, you want to make sure that the house isn't going to fall down, that it doesn't have termites, that there's not anything major wrong with the property. And also too, during those things, the appraiser who's going to go out on behalf of the lender could find a few things wrong with the property themselves and bring that back to the bank and say, hey, these are things that, I'm looking after the bank's investment. We want these fixed before they can get you the money to buy the property. Right. And so there's some of those items where at that point becomes a negotiable thing where they say termites or there's dry rot, and the appraiser can see that. They're going to come back and say, depending upon the loan type, they may care about that. FHA, they're going to go, all this needs to be taken care of.
Yep. Right.
And, conventional, some may just say, you know what, seller can deal with, buyer can deal with that when they move in.
Right.
Yeah.
And so there's a lot of that involvement from the process of just doing your investigation. And there's going to be some, I know from buying a house, my first house, even my second house, buyers are anxious. They want an update every single day on what's going on. And we may not have an update for them every single day. We may not know, Shoei's going to be doing his thing from the loan standpoint, and there's some things and processes that have to work through that. We have documents that are maybe out for signature or waiting for the seller or buyer to respond. There's going to be a lull in some time frame, so don't be afraid if you don't hear from us. But also, too, that's the agent and the lender's responsibility to set that expectation up front. Mm-hmm. If you don't hear from me, that's good news, right? And sometimes I may just say, I'm going to follow up with you every Tuesday or every Wednesday or every Friday, whatever. Whether we have an update or not, I'm going to call you, right? And just tell you, nothing new, right? But it gives them an opportunity to ask some questions.
Right.
Yeah.
In regard to, then when you get the loan, you get the final sign off, you're ready to rock. At that point, as soon as I'd say about halfway through the process of an escrow, our job from inspections, disclosures, walking them through, that's kind of where the realtor's job kind of, for the most part, takes the pause, and the lending side takes over to make sure, now we're going to make sure we get the money to escrow so that we can close on the house. And so what's funny is I wish that there was a big whiteboard behind me, because I did this on a webinar years ago, is I think that a normal consumer would be surprised at how many people are involved in one real estate transaction. From the realtor on the buy side, the realtor on the sell side, the buyers, the sellers, the lenders, the underwriters, the processors, the escrow people, the title people, the home inspectors, the pest inspectors, the appraiser. I mean, so many cooks in the kitchen, and they wonder why stuff doesn't just happen according to plan every single transaction, right? You know, and so as we tie it up, then it's celebration time, right? As soon as Shelby and the team goes, great, we got the loan, we got everything back, the bank's satisfied with the package we're sending them. Here's the money, close on the deal, we meet you at the property, we sign that escrow, we give you the keys, and it's celebration and party time, right? But there's a process in between there, and going back to it is make sure that you're working with people that you know and trust, and if at all possible, that know and trust each other.
Oh yeah.
As well, right?
Yeah.
You know, for sake of time, let's wrap up. You know, but anything else that you wanna add from the lending side, Shelby, or from the real estate side?
I think we did a pretty good job touching on everything. Maybe on our next webinar, maybe what we can do is we'll just focus on certain aspects of the process that really become cumbersome, or you know, something like that. And maybe we can focus on just credit. We'd love to hear everybody's ideas on what they're wondering, you know, maybe some of their biggest fears or horror stories that they've heard. That way we can focus on some targets, or, you know, whatever. But yeah, I think we did a good job touching on everything, and good work, guys.
Yeah, no, we definitely want to touch that. Likewise, man. We definitely want to do this more, get more out there into the community, and educate consumers on the process. So anything else you want to?
No, I think that's good. I think if there's anybody out there, you know, that watches it, that has a question, that maybe they need some, they don't know if their credit's good enough or what their situation is, I think it's important, you know, contact Shelby, and he'll make sure to help you out and see if maybe buying a home is, you know, a option that's more in the near future than you thought.
Yep.
Get you to your home goals.
Awesome. And then we're going to share everybody's contact information on the webinar too, and on the emails and the replays and everything. So, all right, we got Shelby Elias. We'll give you his information as well. You're definitely going to want to contact him when it's time to buy that house and get pre-approved. Don't wait till the last minute to get pre-approved. Please, it's going to make everybody's job and make you have some serious heartburn if you wait till the last minute. You know, Shelby Block, Jesse Garcia, we're here to make your life easy and find you your dream home. So everybody, thanks again for joining. We're going to be, man, this is, I'm thinking about it, and this is just some solid information. I think once a month is just too sparse. I think we need to do this more often and just get it out to people. You know, but maybe let's schedule another one, at least maybe 2 weeks out, do another one, and just see what kind of feedback we get, and you know, and see if this is helping anybody, and see if we can get more questions. I definitely want to get more questions in ahead of time so we can answer them live during the webinar, and then just get more questions during the webinar as well.
Perfect.
Cool.
All right, guys.
All right, well, I'm going to end this real quick, and then hang on one second, Shelby.